Okay, that's the global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Vivek is joining us to tell us all the market cues we need to watch out for today. Hey Vivek, good morning.
Well, good morning. It does appear to be a very, very strong footing as far as, the kind of handover we've received. Unlike Indian markets, most of the global markets have started off October month on a very strong, front foot. And if you're talking about how, the markets worldwide, especially the U.S. markets fared, very strong. If you're talking about the Dow Jones and S&P gaining more than 2.5%, Nasdaq gaining over 2.2%. And in fact, the yield, which was a big worry, as well as the dollar, both of them eased off, again, aiding the equity rally. You also saw a sharp rally as far as the commodities were concerned, with gold rising over 2% and silver, surprisingly also rising over 7%. Now, when you're talking about the Asian markets, it's important to note that in the Asian markets, China and Hong Kong markets are closed in the session today, but the other Asian markets like Japan as well as the Korean markets have started off on a very strong footing, up over 2.5%. Unfortunately, crude prices too surged significantly. Crude prices ended higher by 4%. Now, this was on the back of a news development that indicated that the OPEC Plus is weighing the biggest output cut since 2020. Now, the SGX Nifty, along expected lines on the back of very strong handover, is actually indicating a very strong start as far as the Indian markets are concerned. And if you're talking about yesterday, remember yesterday was a very feeble session. Over 40 stocks in the Nifty ended in the red. However, on the positive side, you actually saw cash buy figure coming in from FIs for the first time since September 19th, and this is something that the market will take a little bit of hope from. So again, the global cues are what continue to remain on top of most of the investors' mind, with a whole host of quarterly business updates coming in as far as corporate India is concerned.
Okay, all right. Vivek, thanks a lot for that. And of course, you spoke about a lot of updates from the corporate world. Surbhi is now joining us to tell us about all the stocks that will be in focus today. Surbhi?
I have a few stocks on my radar today. Most of the companies have come up with their Q2 business update. First is HDFC, where the loans assigned were up 28%, the dividend income was up 16%, and individual loans sold was up nearly 27%. Next is M&M Financial Services, where the asset quality has improved. The GNPA has come at 7% versus 8% in the previous quarter, and the dispersals are up 9% on a month-on-month basis. IndusInd Bank, where the bank has gained market share, the deposit growth is best in 5 quarters and the loan growth is best in 4 quarters. Vedanta released their production figures for the second quarter. The total alumina production is up nearly 2% at 5.84 lakh tons, and the refined zinc production has increased by 16%. Marico, they say that the demand sentiment in India is on a similar lines as the previous quarter. The India business posted a low single-digit volume growth. They expect the consolidated revenue in the quarter to grow in low single digits and operating margins to remain constant on a year-on-year basis. Moving on to Avenue Supermarts, where they posted the highest ever quarterly revenue. Their standalone revenues have grown 36% at 10,385 crores, and the total number of stores stood at 302. And lastly, KEC International, where the company won orders worth 1,407 crores across business segments.
Okay, a lot of business updates today. Surbhi, thank you so much for joining us with all of that. Finally, Manglam is joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So now, yesterday was a weak day of trade, and despite that, the FIs ended up buying in the cash market. We saw the FIs buy almost 600 crores in the cash market, with the DIIs selling 420 odd crores. But importantly, it was the selling in index futures that caused the weakness in the overall index sentiment. Almost 1,200 crores worth selling. Out there, the FIs unwound about 3,000 longs and added close to around 10,000 shorts as well. So a minor spurt is what we saw earlier in the long positions, from 13% to 16%. Now that's gone back to 13%, with 87% positions on the short side, which necessarily is not a bad thing. In fact, with the SGX Nifty indicating a sharp gap up at the open, the question is whether we see short covering or not, because the FIs also wrote about 1.2 lakh calls and unwound some short puts. Where were the calls written? 17,000 call. That saw an addition of almost 48 lakh shares on the open interest side. 17,100 call almost saw 37 lakh shares on the open interest side, and 16,900 call as well saw a fair amount of writing. So that's telling you that if the market sustains above that 17,050 mark, will be extremely crucial to see a spurt. And a spurt perhaps would be on the cards also, because the put call ratio ratio is closer to the 0.7-0.8 mark, where the level from where it usually indicates a bit of a bounce. Importantly, yesterday's close was also crucial. We closed just 10 points above the 200-day exponential moving average. So we did take some support out there. And now the only important thing to watch out for will be yesterday's high, 17,115. If we go past that, then there could be further room for short covering. The SGX Nifty is indicating a firecracker of start ahead of the Dussehra holiday.
It is. Mangalam, Vivek and Surbhi, thanks a lot for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, we'll get you the excerpts from an exclusive conversation we had with veteran investor